Welcome back to everyone. Today we're diving into a major XRP setup that has the entire crypto market watching closely. Because after falling below the key $1.40 level, Ripple's XRP is now sitting at one of the most important technical crossroads we've seen in weeks. Traders are asking the big question right now. Is this just a temporary cool down before the next breakout? Or are we about to see deeper downside pressure heading into next week? And honestly, the charts are sending mixed signals. We've got heavy resistance overhead, rising volatility, increasing trading volume, and a market that still hasn't fully decided whether risk appetite is returning or fading again. So in today's update, we're going to break down exactly what happened with XRP during the latest pullback, why the $1.42 to $1.45 zone matters more than ever, what whales appear to be doing behind the scenes, and why some investors are beginning to rotate attention toward newer infrastructure projects, while XRP fights to reclaim momentum. There is a lot happening right now, so make sure you stay all the way to the end, because next week could become one of the biggest turning points for XRP price action this month. Over the past 24 hours, XRP slipped under the $1.40 mark and spent most of the session moving between roughly $1.36 and $1.43. At first glance, that price movement may not look dramatic compared to the wild swings crypto traders are used to, but what really matters here is the structure behind the move. The decline did not happen because of panic liquidations or massive forced selling events. Instead, market activity throughout Friday looked relatively controlled, which suggests traders were taking profits after the previous rally, while broader risk-off sentiment across crypto also played a role. Bitcoin and Ethereum both pulled back during the same period, which added additional pressure to altcoins across the board. That's important because XRP wasn't collapsing in isolation. The entire market experienced weakness at the same time. But what makes XRP different is the technical position it now finds itself in after losing the support zone around the 200-day moving average. What used to act as a floor for buyers is now acting as resistance, and in trading, those flips can completely change short-term momentum. The 200-day moving average currently sits near $1.2238, and traders are watching that level almost like a battlefield right now. Every attempt XRP makes to bounce is immediately running into selling pressure near that zone. That's what makes the next few trading sessions so critical. If XRP can reclaim that level and hold above it convincingly, the market narrative changes quickly. But if price keeps getting rejected there, then bears maintain control in the short term. One thing worth noting is that this isn't just a random technical indicator anymore. XRP spent a large portion of last week trading around that exact range, which means many traders establish positions there. When price falls below an important area where large amounts of trading previously occurred, those same participants often sell into future rallies just to break even. That creates what traders call overhead supply, and that overhead supply can slow down recovery attempts unless fresh momentum enters the market. So even though XRP still has bullish believers, the chart is now demanding confirmation rather than hope. Looking deeper into the data, XRP has dropped more than 9% over the past week, while trading volume surged sharply during the latest decline. In fact, 24-hour volume jumped nearly 87%, reaching close to $5.9 billion during Friday's session. That combination matters because rising volume during falling prices often signals distribution instead of accumulation. In simpler terms, it suggests some participants are exiting positions rather than aggressively buying the dip. Now, that doesn't automatically mean a crash is coming, but it does show that uncertainty remains high. Markets tend to become extremely emotional around major technical levels, and XRP is currently sitting directly in one of those emotional zones. Traders who bought during the last breakout attempt are nervous, while short-term bears see an opportunity to press lower. Meanwhile, long-term holders are waiting for signs that institutional demand is still alive. So what we're seeing right now is basically a battle between patience and fear. And until one side clearly wins, XRP may continue moving sideways in a volatile consolidation range. The next resistance level above the 200-day moving average sits near the $1.45 region. And this is where things become even more interesting technically. Analysts are noticing that the 50-day exponential moving average is converging right around that same zone, creating a strong resistance cluster. That means XRP doesn't just need to break above $1.42 temporarily. It likely needs a convincing daily close above $1.45, before traders fully regain confidence in a bullish continuation. If that happens, the entire structure flips again, and momentum traders could quickly re-enter the market. But until then, every rally attempt faces heavy skepticism. This is exactly why many experienced traders are staying cautious, despite believing in XRP's long-term fundamentals. The technical picture simply hasn't confirmed strength yet, and in crypto, technical confirmation often matters just as much as narrative. The market wants proof that buyers can absorb selling pressure before it rewards the asset with another breakout phase. Right now, 3 major scenarios appear to be developing for next week, and each one could dramatically impact short-term market sentiment. The bullish scenario is the one XRP supporters obviously want to see. In that setup, XRP successfully closes above the 200-day moving average on the 4-hour chart, reclaims momentum, and begins pushing toward the $1.45 resistance area. A strong daily close above that zone would likely trigger renewed optimism and potentially open the path toward higher targets again. Momentum traders would probably view that as confirmation that the correction phase has ended. But the base case scenario may actually be the most realistic in the short term. That outcome involves XRP consolidating between approximately $1.375 and $1.42, while the market digests recent losses. In that environment, buyers cautiously defend support, while sellers continue defending resistance. Price action would remain choppy, frustrating both bulls and bears until a stronger directional catalyst appears. Of course, traders also need to respect the bearish possibility, because ignoring downside risk is how investors get trapped emotionally during volatile markets. The key level on the downside appears to be around $1.35. Analysts have repeatedly highlighted that area as one of the most important support zones for May. If XRP breaks below it and closes there decisively, then the probability of a deeper correction increases significantly. In that scenario, the next major support zone on the weekly chart comes closer to $1.20. And if price were to move that low, the entire recovery structure from earlier this year would suddenly look much weaker. That doesn't mean XRP's long-term future disappears overnight, but it would absolutely shake confidence in the short term. Traders understand that momentum can shift very quickly in crypto, especially when key support levels fail. That's why next week matters so much. The market is essentially waiting for XRP to prove whether this is a healthy consolidation or the beginning of something more bearish. One factor still keeping many investors optimistic is the continued discussion around whale accumulation patterns observed earlier this month. Large wallet activity suggested that institutional or high net worth participants were quietly accumulating XRP during previous weakness. That kind of activity typically attracts attention because smart money often positions itself before major market moves. However, there's an important difference between interest and conviction. Institutions may still be monitoring XRP closely, but the current chart structure is forcing everyone to wait for stronger evidence before fully committing. In other words, whales may still like XRP fundamentally, but the market still wants confirmation technically. And honestly, that's understandable considering the broader uncertainty affecting crypto markets right now. Bitcoin's own hesitation near major levels has created caution across altcoins. And until the larger market stabilizes, XRP may struggle to build aggressive momentum on its own. Another reason traders are becoming increasingly cautious is because XRP now carries an enormous market capitalization. At roughly $85 billion, it takes a huge amount of capital inflow to move the asset dramatically higher compared to earlier years. That doesn't mean XRP can't rally, but it does mean upside percentages become mathematically harder as the market grows larger. Many retail investors are starting to realize that reality, and some are now exploring smaller cap infrastructure projects that potentially offer greater early-stage upside. This rotation toward newer narratives happens during almost every crypto cycle. When established assets begin consolidating or slowing down, traders naturally start searching for the next opportunity that could outperform. And one of the projects beginning to generate conversation in that environment is a newer infrastructure-focused platform called LiquidChain. LiquidChain, trading under the ticker LIQUID, is positioning itself as a Layer 3 cross-chain liquidity solution designed to connect multiple blockchain ecosystems together. According to the project's pitch, the platform aims to combine liquidity from Bitcoin, Ethereum, and Solana into one execution environment so developers can deploy applications across multiple ecosystems simultaneously instead of building separately for each chain. That interoperability narrative has become increasingly popular in crypto because fragmentation remains one of decentralized finance's biggest problems. Billions of dollars in liquidity remain scattered across different blockchains, creating inefficiencies and friction for developers and users alike. Projects attempting to solve those fragmentation issues naturally attract investor attention, especially during periods when established large-cap coins are struggling to generate explosive returns. And right now, with XRP consolidating near critical levels, some traders are clearly looking for alternative opportunities with stronger growth potential. The architecture behind LiquidChain focuses heavily on what it describes as a unified liquidity layer with simplified execution and verifiable settlement systems. The goal is to reduce the complexity developers face when trying to interact with multiple chains at once. Whether the project ultimately succeeds long-term remains to be seen, but the reason it's gaining attention is because infrastructure narratives continue to dominate conversations inside the crypto market. Investors are no longer only chasing meme coins or hype tokens. Many are now searching for projects attempting to solve real technical bottlenecks inside blockchain ecosystems. That shift in investor psychology is important because it reflects a more mature market environment compared to previous cycles. People still want explosive upside, but they increasingly want a believable use case behind it as well. And that's exactly why newer infrastructure-focused pre-sales are beginning to trend again, while large-cap assets like XRP move sideways. According to the latest figures being circulated, the LiquidChain pre-sale is currently priced near $0.01457 and has reportedly raised over $737,000 so far. Those numbers are attracting attention because many traders view early-stage pre-sales as opportunities to enter before exchange listings potentially reprice the token higher. Historically, early pre-sale stages can generate substantial gains if the project successfully builds momentum later. However, investors also understand that pre-sales carry significantly higher risk compared to established assets like XRP. While XRP already has major exchange support, liquidity, and institutional visibility, smaller projects still need to prove execution, adoption, and long-term credibility. So although newer infrastructure plays may offer larger upside percentages, they also come with much higher uncertainty. That balance between risk and reward is exactly what investors are weighing right now as they compare stable large caps against speculative emerging ecosystems. Meanwhile, XRP holders remain laser-focused on one thing above everything else: whether price can reclaim momentum before bearish pressure accelerates further. Sentiment in crypto changes extremely quickly, and markets often move hardest when traders least expect it. One strong daily candle above resistance could suddenly shift the mood completely. But continued rejection near the moving averages could increase frustration and fear. That's why next week may end up becoming a defining moment for XRP's short-term trend. Traders are watching every candle, every bounce attempt, and every volume spike for clues about where momentum wants to go next. And because XRP historically tends to make aggressive moves once consolidation phases end, many market participants are preparing for heightened volatility very soon. There's also another psychological factor influencing XRP right now, and that's trader exhaustion. Over the last several months, XRP has repeatedly approached breakout territory, only to lose momentum and return back into consolidation ranges. That pattern creates emotional fatigue among investors because people start questioning whether momentum will ever fully return. But ironically, markets often create the strongest moves precisely when confidence begins fading. When traders become frustrated and stop expecting a breakout, that's sometimes when volatility suddenly explodes. So even though sentiment feels cautious at the moment, experienced crypto participants know that conditions can reverse rapidly. XRP remains one of the most heavily watched assets in the entire digital asset market, and any meaningful breakout above resistance would immediately attract massive attention across social media and trading communities. At the same time, broader macro conditions are still influencing crypto behavior overall. Investors remain highly sensitive to movements in Bitcoin, interest rate expectations, and global risk sentiment. When traditional markets become nervous, crypto usually reacts quickly. That means XRP's future over the next week may not depend entirely on XRP-specific developments alone. If Bitcoin regains strength and risk appetite returns to the market, XRP could benefit significantly from that shift. But if broader weakness continues, even strong technical setups may struggle to fully break out. This interconnected market behavior is something traders absolutely cannot ignore right now. Crypto does not operate in isolation anymore. Institutional involvement has tied digital assets much more closely to broader financial sentiment than in earlier cycles. As we head into the upcoming trading week, the key levels are now extremely clear. Bulls want to see XRP reclaim the 200-day moving average around $1.42 and eventually close above $1.45 to restore confidence in the bullish structure. Bears want continued rejection below resistance and a decisive breakdown beneath $1.35 to open the door toward lower support levels. Until one of those scenarios clearly plays out, volatility and uncertainty will probably remain elevated. That means traders should expect sharp moves in both directions rather than smooth trending conditions. And honestly, that type of environment is exactly where emotions become dangerous. Patience and discipline matter more than excitement when markets sit near major decision zones like this. So right now, the big question remains the same. Is XRP simply consolidating before the next breakout? Or is the market warning investors that deeper downside pressure is still ahead? The answer will likely start revealing itself within the next few sessions. One thing is certain though, XRP is approaching a critical moment, and the entire crypto community is paying attention. Whether you're bullish, bearish, or simply waiting on the sidelines, the next move could shape sentiment for the rest of the month. And if volatility returns the way many traders expect, things could get very interesting very quickly. Stay locked in because we'll continue tracking every major development right here on XRP Insider.